So, you've heard about the Mega Backdoor Roth IRA, and you've got some questions about how this thing actually works. Well, in this video, we'll be covering what a Mega Backdoor Roth IRA is, who is going to be eligible for one, and then how to use the Mega Backdoor Roth IRA to save over $60,000 into your Roth IRA this year. And before we dive in, I do want to say this is all general information, does not apply to your personal circumstances, and these are only things that I have personally done. I am not giving you advice on what you should do, but let's dive right in and start off with what a Mega Backdoor Roth IRA actually is. So first off, a common misconception. A lot of people think that a Mega Backdoor Roth is some kind of gray area in terms of legalities or some kind of loophole that the IRS isn't too fond of. This actually isn't the case, and it is very allowed. The IRS actually does have specific guidance targeted at the Mega Backdoor Roth IRA that clears up any misconceptions about this. So don't let the name fool you. Although it is a backdoor option, it's not in any kind of legal gray area or disallowed by the IRS. The second thing to note is that it's more of a strategy than an actual account. Now, in order to perform a Mega Backdoor Roth IRA, you're going to have some specific accounts, which we'll talk about in this video in a little bit of detail, and then I'll have a further video coming out soon about how to actually set one up step by step, and that'll take you through all the accounts you actually need in order to execute this strategy. Now, in essence, like I mentioned, this strategy does allow you to contribute over $60,000 per year to your Roth IRA, which can be extremely significant, especially if you're on the younger side of things. I mean, last year when I was 22, I put about $60,000, a little bit more, into my Roth IRA. I plan to do the exact same thing this year at 23. And so if you compound that, we're looking at 6 figures into my Roth. You compound that over 40 odd years until I'm about 65. That's going to be a pretty substantial retirement that I'm able to save just in the span of 2 years. Now, even if you're not in your 20s, but say you're in your 30s or your 40s, doing this can give you a significant leg up because you're still going to be able to compound that money over the span of 20 to potentially 30 years. And when you withdraw it, it's all going to be tax-free. Now, that being said, who's actually eligible for this Mega Backdoor Roth strategy? Well, you do have to have a pretty specific set of circumstances, and there are 4 criteria that you're going to need to meet in order to execute on this strategy. So let's walk you step by step through each of these criteria right now. The first of which is that you have to be self-employed. Now, there is a way to do this if you are employed at a company that has a very specific 401k plan. And so if that is the case, keep watching this video if you know that your company does allow it. But in my case, I'm self-employed, and so the method that I use will be slightly different than the method that you would use if you were employed somewhere else. The second criteria is that you must have yourself on payroll. This means that your company is cutting you a paycheck every single month and that you are officially a W-2 employee of your own company. Now, this likely requires you to be set up as an S corporation, which I have plenty of other videos about, and you'll need a payroll provider service in order to execute on this. Now, I have my personal recommendation that I use down in the description below, and if you do choose to sign up using that link, you'll actually get a free $100 Visa gift card, so consider doing that if you don't have a payroll service set up already. Now, the third criteria is that you must have a solo 401k. Now, this is a very specific type of retirement account for small business owners and entrepreneurs. And I've got plenty of other videos on this channel walking you through what those are and how to set them up. Now, the easiest way to do that is going to be to use the link in the description below. That'll take you to the solo 401k provider that I personally use and that I've been using for the last 2 years. Now, there are a lot of options out there when it comes to setting up your own solo 401k, ranging all the way across the spectrum of setting up a free solo 401k to hiring a small business retirement consultant to build out a custom plan for you, because a solo 401k is a very flexible type of retirement account. There's a lot of provisions that you can include, different features, benefits, etc. Now, through the dozens of hours of research that I did in terms of choosing a plan for myself, I kind of landed somewhere in the middle where it's not a free plan because the free plans don't really give you all of the features and customizations that you need in order to run a Mega Backdoor Roth. In fact, right now there are no free plans out there that will allow you to run a Mega Backdoor Roth. You are going to have to pay for a company to set one of these things up for you. And so again, the one that I use is in the description below. I spent dozens of hours on this. This is the cheapest option that you can use that will allow you to run the Mega Backdoor Roth strategy. Now, if you're not just willing to take my word on that, let me walk through the 2 provisions that your solo 401k plan is going to need to have in it in order for you to run the Mega Backdoor Roth strategy. That way, if you have these 2 provisions, you can go out there, do the research yourself. Again, I spent a lot of time on this, and and I landed at the one that I use for a very good reason. But if for any reason you don't want to take my recommendation, here are the two provisions that you need. One, your plan needs to accept after-tax contributions. Now, with any 401k plan, there are really three buckets that you can contribute in terms of the dollars that you put in. There's the pre-tax bucket. This is the most common thing that people think of with 401k plans. It's where you contribute to that plan, and then you can deduct that from your income when you're paying taxes. Now, this basically means you don't pay taxes now, but you are going to pay taxes in the future. The second bucket is the Roth bucket. So in this bucket, you pay taxes and you don't have to pay taxes in the future, again, provided you follow all of the rules and restrictions that are associated with Roth funds. But this third bucket, which is available in certain 401k plans, is an after-tax bucket where you still pay taxes on it today, like you do with Roth funds, but you don't get a lot of the benefits that come with Roth funds. So why would you do this? Well, when contributing to the Roth bucket of your account, you're going to be limited to $20,500 in the year of 2022. So if you want to contribute more than that amount, you're going to have to use the after-tax bucket. Now, thankfully, you're going to be able to roll those after-tax dollars into Roth dollars. We'll talk about how that works later, but just note you need a plan with an after-tax bucket. And I'll also say that the total contribution you can have across all three buckets in the year of 2022 is $61,000. And there's a $6,500 catch-up if you are over the age of 50. So if you're 52 years old, that $61,000 becomes $67,500. Now, the second requirement that your plan needs is it needs to allow in-service distributions. This basically means that you're able to take money out of it or roll money out of your plan before you actually leave your job. Because most 401k plans that you're going to find at your company are not going to allow you to just roll money out whenever you want, unless you meet a very specific set of circumstances, which is basically going to negate you from being able to run the mega backdoor Roth. So you're going to need this provision in your solo 401k plan in order to run a mega backdoor Roth. Now, the fourth and final criteria that you need to meet in order to run this strategy is that you shouldn't have any pre-tax IRAs under your name. So this includes a traditional IRA, a SEP IRA, or a simple IRA. If you have any of these plans set up, you're going to need to deal with that before you can run the mega backdoor Roth. Now, the reason for this is that they complicate things significantly when it comes to taxes, because there's this rule called the pro rata rule that really complicates things when you're trying to run a mega backdoor Roth and you have pre-tax IRAs, which is likely going to make you pay a lot more in taxes than you probably should in order to run this strategy. So before starting this, I actually had a SEP IRA that I had set up in the past with, I think, about $15,000 in it. So before I could start running my mega backdoor Roth, I had to roll that SEP IRA into my Roth IRA and pay the taxes on that, okay? Because with a SEP IRA, it's pre-tax, Roth IRA, post-tax. So I had to roll that over, pay tax on the 15 grand, and then I could run my mega backdoor Roth. So if you have a traditional IRA, a SEP IRA, or a simple IRA, you're probably gonna have to do that before you can actually run this strategy. So now that you know what this thing is and who is eligible for it, how do you actually do it? Well, I've got a full tutorial coming very, very soon that'll walk you step by step through the process. So I'm gonna keep this pretty high level just so you can understand kind of the mechanics of how this works. And then if you want that step-by-step guide, that'll be coming very soon. Now, big picture, there's a 6-step process that you're going to have to follow for the mega backdoor Roth to work. The first step is that your business makes money. Okay, you're self-employed, your business generates income. Step 2 is that your business pays you a salary. Again, you have to be a W-2 employee of your business, and your business has to cut you a paycheck. Now, in order to max out your solo 401k, you're going to want to pay yourself at least about $72,000. Again, this isn't a recommendation, though, on how much you should be issuing yourself as a salary. You have to pay yourself a reasonable salary by IRS standards, but it should be at least $72,000 or so in order to max out this strategy. Now, how we get to that number is basically you take $61,000, which is the maximum you can put in, and then you can add on those payroll tax that you're going to be paying in order to cut yourself that salary. Now, step 3 is you're going to establish that solo 401k, ideally using the link in the description below. Step 4 is contributing that $61,000 to your solo 401k. Again, this is a bit of an involved process though, so to really see how this works, you're going to want to watch that next video. Step 5 is to do an in-service distribution to roll those funds from your solo 401k into your Roth IRA. And this is going to be really important that while those funds are in your solo 401k, they're not earning any interest and they're not invested, because if they are, that's going to significantly complicate things come tax time. So almost immediately roll those funds into your Roth IRA. And then step 6 is going to be to just invest those funds in your Roth IRA as you wish. That is the entire strategy, very high level in a nutshell. Now, this can be a very confusing process, especially if you're not super familiar with what you're doing. I got a bit of a head start because I learned about a number of these things while I was in school getting my finance degree, and I'll be happy to answer your questions in the comments below, but just keep in mind that I am not a professional and I am not giving you any kind of investment advice or telling you what to do. Also, my recommendations for solo 401k provider and payroll provider will be down in the description below, again with some other tools that will allow you to score that $100 Visa gift card as well as some other free goodies. So check those out, and I'll see you in the next one.